You need to pay attention because a lot is happening in the financial markets around the world. Recently, Michael Burry, who was famous for predicting the housing market in 2008, he recently bet $1.6 billion on the US stock market crash by the end of the year. So either this guy knows something or he's crazy. Well, what's wild was after the news broke of this prediction by his a couple of days ago, the second largest real estate company in the world in China, Evergrande, they filed for bankruptcy, and this sent crypto prices plummeting and China markets in a frenzy when this news broke. So you're starting to see a lot of stuff happen around the world as far as different asset classes show some signs of pain. And another thing that most people don't know about the US markets is Japan is one of the biggest consumers of US debt. So for like the last 3 to 4 decades, Japan's yield on their bonds has been less than 0.5%. Well, their bonds have started to see an uptick as US bonds treasury notes have been down. So Japan is starting to move off of US debt. So there's some troubling signs of stuff happening around the world. Another thing is tomorrow, the BRICS National Summit is taking place in South Africa. So you have countries like China, Russia, South Africa, Brazil, and 40 other countries that are interested in having a discussion about creating a new currency, BRICS. This is going to be in competition with the US dollar. So there's a lot of things at play right now as far as currencies having issues, but also new currencies being created. Most people aren't educated, but the US is actually looking into this right now with FedNow. This is going to be our version of a CBDC, or at least a trial of it. And major credit card companies like MasterCard and Visa are partnering with crypto companies like Ripple to explore CBDC partners and avenues. So if you Google the average currency lifespan is like 30 to 35 years. So with the invention of CBDCs, we're seeing things happen at a way faster pace. So that's like the bearish news of stuff happening in the world. Part of the reason why I like encouraging people to educate themselves about Bitcoin and crypto is there's some fascinating stuff happening on that side of the coin. When you have currencies being in question of different nations and the US dollar weakening, more people are going to be looking to Bitcoin and crypto as an alternative asset to store their currency. So a couple of days ago, Coinbase got the approval to do derivatives. Now, I'm not the biggest fan of derivatives because it's just more money being in the space with leverage, but you can only control your actions and attitudes. So with Coinbase, you can't control how things play out, but with Coinbase getting approval to have derivatives in the US, that's going to lead to more money potentially flowing into Bitcoin and crypto in the future. And also, you already have big companies like BlackRock and Fidelity already applying for spot ETFs for Bitcoin. BlackRock has anywhere between $8 to $10 trillion assets under management, and that equates to like the third largest economy in the world. So you have major players looking at opening up Bitcoin spot ETFs. And the reason why I think Bitcoin, and I believe Bitcoin and crypto will get further attention and further capital when you have all these currencies around the world experiencing pain. Here's another article of Fidelity reapplying for a spot Bitcoin ETF. So kind of where do you go from here? In my opinion, I believe everyone should put 1% of their net worth in Bitcoin. But also, I just wanted to create this video to like encourage people to pay attention because this world's moving at a rapid pace, especially when you look at stuff happening in the financial markets. Whether you're confident in stocks, real estate, bonds, treasury, right now there's a lot of stuff happening, and I encourage you to get your budget in place and to stay on top of this because things are coming down the pipeline with CBDCs and you need to be prepared. Thanks for listening to Larose Digital. Catch you next time.